Thanks everybody for coming out, and it's been a great event so far. Again, my name's Trevor Kurland, and I'm VP of Energy Markets for Greensparc. We do energy optimization for fleets of data centers. That's how we got into crypto, effectively as a use case. We're based out of San Francisco. We operate across North America, so we're energy markets folks at heart. Team of 6 people, again, based out of the Bay Area. We'll get a little bit more about, probably as we go through the discussion here, about what we all do, or at least we'll be able to address that a little bit. But I'd like to start out by, there's a great panel. I had a kickoff call with them last week. It's a great group of guys. I'm just going to start with going down at the end, start with Ed. Just introduce yourself and say a little bit about what your firm does and what you guys are doing here.
Let's set here because I didn't want to go first.
What's that?
So my name is Ed Holloway. I'm the founder of a fund called Mind Capital. We are a fund focused on cryptocurrency mining and blockchain technology.
Great.
All right. My name is Karl Diab. I work for Riot Blockchain. The job title they made up for me is lead blockchain engineer. Most recently, my latest project was building a 12-megawatt mine in Oklahoma City, consisting of 7,500 Antminer S9s and 500 L3s. I was in charge of doing anything IT, so setting up the network, the control and maintenance software, and just the maintenance procedures. Quick bit of history, I started mining Bitcoins in 2012, just building a few ghetto GPU mining rigs out of plastic file crates and flipping them on Craigslist, and just slowly turned that into a career. And here I am.
Great.
I'm Ben. I'm based out of Hong Kong. I've been building and operating 2 megawatt to 20 megawatt mining facilities in mainland China for the last 4 years. Currently, we are focused on building industrial scale containerized mining systems for energy utilities and energy transmission companies to capture excess energy and waste energy and convert that and monetize that into Bitcoin.
Great.
My name is John. I'm a co-founder of Abelian. We're a blockchain AI development company. Last year we built an optimization software to increase the performance of cryptocurrency mining profitability, and today we focus more on software solutions for enterprise.
Fantastic. And thanks, guys, for the introduction. And folks, I just want you to know, I know it's a fairly intimate group here, and I've been I've been sitting in on the sessions and watching people ask questions. I don't want to keep it so formal as to do, wait for us to talk and then do Q&A. If you've got a question anytime when we say something, by all means, just sort of put up your hand and we can stop and address things as we go. Kind of tells me what you guys think is most important anyway. I think there are some folks at the back who have microphones for that. But to kick it off, maybe we'll start with you. Let's start with just the biggest picture question in your mind from your perspective, and everybody as we go down the line, your perspective about crypto mining right now. What's the biggest sort of single challenge right now, do you think?
Biggest challenge? I think it really has to do with the price of Bitcoin and the market where it's at. If you're if you're over a certain cost per kilowatt hour for electricity and you're mining, you have to decide if you're going to shut down or if you're going to persist and hope the market picks back up in the future. So it's
really an energy cost.
It seems like it. Yeah.
Ben?
I think it's a combination between energy cost and marketing. Most of the facilities and most of the miners that I know are still functional, still profitable, still operational. It's really the groups that came in during the craziness and the peak, spent way too much money on their hardware, paid way too much money for their electricity, that the ones that are not profitable and are closing down now. I think it's mostly marketing. The people who've been mining for longer than that, people who've been in since before 2016, you should still be in a good situation.
And it's going to sound like I'm beating a dead horse here, but I absolutely agree. One of the biggest problems that we have is the price of crypto at the moment, and I guess a little bit of a lower investor interest. So we're seeing a lot of miners kind of just shutting down their mines right now because they're not pleased with the profitability at the moment. But in my opinion, I think it's the best time to be investing because the price of hardware is dirt cheap right now. You can really take your time and negotiate better deals for power rates and rents. Not to mention, in terms of dollar for dollar, you can buy Bitcoin hash rate for about 16 times less than we could at the peak during the last bubble when we got to $20,000 as the price of Bitcoin.
Ed, you're the guy trying to make money off this. What's the pain
Yeah,
point
I
that gets
think
solved?
it's pretty much the same theme here, but our facility came online, a 4-megawatt facility, at the end of 2018. So as you can imagine, that's been highly profitable for our electrician. So yeah, we're in the same boat as everybody else at this point. We're just trying to make things sustainable and hoping the markets turn, and we're in a good spot that we have the power and the hardware to really turn things up once things become more profitable.
As an energy guy first, and as somebody who's monitored wholesale energy markets prices across North America, I've been globally in a smaller sense, but as a trader and as an asset manager in North America, kind of how you guys positioned it a bit is a little about what I kind of sit back and go, oh, that's the real challenge about crypto. It's the price of Bitcoin. I'm like, okay, that's funny because we've been using the power grid for a long time. I've never heard a pizzeria tell me, it's the price of dough that really kills me. And there is a mindset of, and it's not, frankly, it's not really just a crypto problem either for us. We do this as data, quote unquote, and it's the same challenge with expansion for cloud, and some of the issues that we face, different issues. I think this audience, being that it's smaller operations than say, large digital native companies based in the Bay Area where we are, who will come to us and say, okay, well, $100 million for a solar farm that I'll just build myself is seed cushion money. I have an ex-colleague, so everybody knows this is a story, who found a way for his large search engine employer, who shall remain nameless, to find a way to capitalize on a wrinkle in the energy markets called ancillary services, which amounted to about $250,000 savings. And I said, well, that's kind of interesting. And he said, well, I can't even get them to, that means a lawyer now has to go sign a deal with the power system operator to be able to open a credit facility to be able to actually get paid. I said, right? He goes, yeah, so that was a year ago, and nobody's even asked for the $250,000 yet. So in other words, it just got lost in that company's sofa cushions, I guess. And for a lot of other people, $250,000 means something. And so for them, it's real easy to invest in whatever they want to do in energy. They can bypass the utility. They can do whatever they like in that space. For crypto, I find that it's obviously it's much smaller. Everybody wants to talk about energy prices and what's really involved within it. We say at Greensparc, we boil it down to 2 to 4 cents all in for that, and people will say, well, I saw the reaction today to BC Hydro's grid of pricing that said, hey, listen, I think somebody in the back said, yeah, can you get that? Can you reduce that by 50%? Like, okay, well, no, you can't really. From your perspective, I think there's some fundamental disconnect in the understanding of the energy markets from Bitcoin mining. That's like, what do you think what would be the thing that you'd want to see explained, the one thing you'd want to know about the energy markets from each of your perspectives to make this easier?
Right. You mean starting from for perspective of somebody who's a new entrant to the market?
Yeah, let's do it for somebody who's a new entrant.
Yeah, I think you had a good point that there's a lot of the early guys got in that they got on the ground floor, they found the opportunity, knew where to optimize and where it was cheap in the grid. A lot of those opportunities disappeared if you're not already in the market as a miner. And so I'm not sure, I could be incorrect, but I believe that BC Hydro rates are 6 Canadian cents per kilowatt hour right now. Maybe I'm wrong, I misspoke.
Yeah.
But that's fixed. You can't really do anything this problem because of the way the law is structured with that. Unless you have a land title or an opportunity to get really cheap hydro, then that's something you want to think ahead of before you start putting money into hardware and investing really heavy. Have a really good plan thought out.
Right. Very interesting point of view. Ben, what do you think on that? Because
I think it's kind of interesting compared to a data center because they're operating under a different model. The data centers like Google, Microsoft, Facebook, they're providing a service, and that data center provides that service. It provides computational power to provide that service. So they have numbers for that, but it's not a direct economic translation. If they provide this service, they get X dollars, right? They have to have the service online 24/7. So they pay different premium, and they have a different kind of mindset. But with mining, it's a direct translation with how much we're producing, what's our cost, what's our revenue, what's our profitability. And so those incentives really just drive us to the point where we need to have the lowest operational cost, which means that we need to reduce our electricity cost. And the people who have the lowest electricity costs are always going to be the ones who produce it. Once you go through all sorts of middlemen like transmission companies or power brokers and everything else, the cost has to go up. Everyone has to make money somewhere. But these energy companies, they're going to have the cheapest cost, and they also have all these inefficiencies in their system, and people don't understand how the grid works, how the grid operates, how electric utility companies always have to produce an excess capacity in order to make sure that there's never a brownout on the grid. And so this is basically a waste every single second of the day, the electricity they produce and the electricity the market actually consumes. And I think this is the real interesting component to the equation, because I see in the future electric utilities and electric operators and producers are going to be integrating Bitcoin directly into grid-based systems and directly into production systems to take advantage of these costs. And I think that's the real key thing to understand here, is that it's going to be integrated into the electric grid itself, as opposed to trying to buy it from the electric grid at the cheapest prices.
Right.
One thing I guess I don't like about the energy companies is the lack of clarity. If anyone here has been mining for a few years now, they've probably chased power around the globe. For myself personally, I started out with my company. We tried to find power in central Washington with the mythical 2 cents a kilowatt hour prices. That quickly dried up. Then we went to upstate New York. That was short-lived. And then finally we went to Quebec. All of those, by the time we got there, were just completely at max capacity. It's difficult really to know what the prices will be for miners are essentially like a large power user. And I think part of that is because the electrical companies don't understand miners. Because we don't use typical loads. If you think of, say, a lumber mill, they might need to consume 10 megawatts at their peak, and that means that electric company needs to put in infrastructure for that 10 megawatts, but most of the time they'll probably be sitting at 1. So I think once they get better education on what our demands are, and for example, for comparison, as miners, if we get 10 megawatts capacity, we're always using 10 megawatts. There's no variation there. So I think once these energy companies are better educated on what our loads will be, we can actually get some lower prices and better clarity to know, rather than having to go meet CEOs of energy companies, we can just do a quick phone call and find out what the rates would be.
Right. Ed, what did you think from here?
Yeah, just kind of piling on top of that one. I mean, we're in a position where we were shutting miners off over the past couple months, and then, of course, that inflicted a whole new conversation with our utility of now you're not meeting the demand that your rates are quoted for. So starting up those conversations, and within like a 3-month period, we literally had almost a 2.5 cent delta in pricing quoted to us from the same utility, just as they became more and more educated on what we're doing, what our consistent loads look like, and things like that. So from our perspective, I think it's us as miners doing a better job, I guess, to educate the utilities, and people at the utilities actually getting engaged, like it sounds like they have here with a whole biz dev program. But certainly where I'm from in North Carolina in the United States, it's not like that. You know, we have a lot of factories, textile mills, and things like that have just shut down in the past 10 or 15 years. So all the utilities have excess demand, but they're just not doing a great job finding guys like us who have big consistent loads to say, okay, here's the real rate if you can actually get if you do these things.
Yeah, it's gosh, I never thought I was going to be in the position of trying to defend the power grid up here from this. I totally hear what you guys are saying, and I totally understand it. And I want to ask this audience. It's a question that I often find myself asking when I do conferences. How many power grids, just in North America, how many power grids are there? I think I asked this guy, so then you guys can answer, because I think we did it. Somebody put up their hand. Guess. 36. Okay. Anybody else? No? Why do you think 36? What do you think? Okay, this table is going to be the problem. Yes? 1,500. Wow, okay. I kind of wish, but no. Yeah, that's all right. Enough.
It's not the Price is Right.
There are actually 3 power grids, and so everybody knows. Often the answer is 1, or if people know a little bit about system operators, they'll say, "Oh, there's 7," and then they try to get fancy. Truth is, there's 3. There's the western side of the Rockies and an eastern side of the Rockies, and then Texas, being Texas, has its own. And these things are actually, it's just the way Texas is. Texas is a little like North Korea that way, where like the train comes to the border and you got to like change the wheels, and so it's just the way that system operates. When we at Greensparc, in trying to explain that, we say, okay, well, hey, you've got a data center north of Boston and a data center in Santa Clara in the Bay Area in San Francisco. At 10 o'clock at night, the price is $50 in Santa Clara for electricity. While it's 10 o'clock at night there, it's 1 o'clock in the morning in Boston. And the power price there is negative $50. Why is it negative? Oh, people go, how could the price be negative? The price is negative because most of that power is wind. A negative price, don't think of it like a stock market where, people think a megawatt's worth whatever at any given moment. It's the price of the next marginal megawatt to bring online. So it's usually negative because there's a lot of wind power. Wind power is a nighttime resource. Solar is a daytime resource, obviously. And what the signal that they're sending in Boston is, I don't want any other power plants on. I got more power than I know what to do with. And therefore, we will tell a client, move your data load that you can move from Santa Clara to Boston, and therefore you get to reap that arbitrage opportunity in power. The truth is, they say, well, you could move the electricity. No, I can't because of line losses, and literally I can't. My point in saying that the 3 grids, there's no actual physical connection between Boston and Santa Clara, and even if there were, there'd be no electricity left by the time you're in Santa Clara. And people don't understand that the infrastructure that we call the power grid is actually pretty old. The average power plant in the United States, I think, is around 50 years old right now. Again, we were talking about this before. Power plants are simple pieces of technology. You're boiling water, or unless you're doing solar or wind. So it's a very straightforward thing to maintain if you've done it correctly. We have use cases right now in California in particular where we haven't maintained things correctly. As long as you keep that operating, you're going to always have a differential in prices, because what happens is a 50-year-old power plant, think about New York State. We were just talking, you were talking about like Raleigh, right? And here you've built out, or in North Carolina, you built out infrastructure for industry that existed 50 years ago, or 30 years ago, or 70 years ago. That automotive manufacturing facility needed a power plant to build radiators or do whatever they were, aluminum smelters or whatever you needed. Then that industry goes away. If you look at New York State, that's why at any given moment the price in Binghamton or Buffalo or Syracuse or Rochester and sort of the Rust Belty part of upstate New York is cheap-ish, whereas New York City now is all the load, and it is maybe double the price on an average hour, let's say, of upstate New York. Whenever I explain that to folks, they go, whoa, you need a power plant in New York City. I said, great idea. You're the first guy who's ever thought of that. Let's go. You tell me where you want to build it in New York City, and I'll show you a petition with 100,000 signatures on it that says, I don't care what energy, green, purple, black, whatever, this thing isn't in my backyard because my house is worth $1 million, or $2 million, or $5 million. So we can't do anything with those facilities, so that it's challenge. So what happens is we get odd incentives to how do I. There's a lot of things that become stories of, I would say, early on in this, like economic development stories, where there is a factory that's shut down, there's a power plant beside it, whether it's a data center or probably not crypto, this is going back 3 or 4 years, but like a data center with the same concept would come set up there and then say, oh, well, there's construction jobs and there's actually not a lot of jobs in running a data center, but it's a economic development story to be able to say, oh, well, we saved the power plant. And maybe that really shouldn't have happened. And I think that what you're saying, Ben or Ed, who made the point about all of the middlemen, there's a price for electricity and there's a price in your power bill, and those two things really don't necessarily have anything to do with each other. There's a lot of middlemen and softening of the tariff system so that everybody shares a cost burden effectively. But for crypto, when we don't understand it, or when you say that like a utility doesn't understand it, it's the biggest challenge. If you think about that, I just said about upstate New York, let's say it's 50 years ago, I came back and told, I'm Ford and I'm going to open another manufacturing line in Syracuse. And it's going to take me 3 years to site it and 5 years to, it's going to take many years for this thing to actually start drawing its first electricity. And that gives me, as NYSERDA or whoever is the utility in that part of New York State, to say, okay, well, I can plan for substations and I can build transmission if needed and we can get it paid for by whoever's building it. Whereas crypto shows up and says, hey, I need 10 megawatts, like here, where do I plug this thing in? And the reaction you see is what Enel does in Italy, which is bizarre to turn around and say, oh, we don't think crypto is ethical, or whatever their argument was. Like, okay, well, we don't get into the ethical discussions about who gets electricity. Well, what's next? Somebody tells Goldman Sachs that we don't think high-frequency trading is economically beneficial. Well, okay, who cares? We don't ask those questions about electricity. It's just, it's there, use it or don't. What can, from your guys' perspective, what could, and for us at Greensparc too, we look at it and say, okay, we've boiled down what the pricing is. We've also said it's we can get something, we could stand up something in 6 months because we understand we understand the processes involved on the energy side. We understand our partners are the asset owners of the power plants in general who have the electricity. They're the ones that own the generation, literally. So they can work with that kind of time frame. Is there something that crypto needs to, the crypto community by and large needs to understand about the time frames that would make it more amenable? What do they need to understand?
Right. Yeah, I think that's something we were talking on the call last week about. There is a time frame for everything, and setting up infrastructure, that's one thing. There might not be a viable infrastructure within the next year in the location you want it. But the other aspects have to do with a lot of logistics. How long does it take to acquire hardware and receive it and install it and on and on and on. So you have to plan ahead for all those kind of factors.
Timeframes are kind of interesting, especially when you're thinking about energy producers and energy markets. They operate on a completely different time frame than we're looking at. When you build a new energy production facility, you're measuring that ROI in decades. You're not measuring it in 6 months like we're doing with crypto. And so, if you're looking at, what's going to happen in the future and what those timeframes look like, I think it's quite interesting to think about, okay, well, from the crypto perspective, maybe the time frame to ROI has gone longer from 6 months to 12 or 18, whatever your horizon is. But if it's with production and energy production, we can actually reduce that ROI that they were first measuring in 25 years Now maybe we start integrating some Bitcoin into the equation to capture these inefficiencies, to provide these kind of arbitrage opportunities, especially if the energy is limited by transportation infrastructure or energy storage technologies, which are not really developed or cost effective. Then we can start making this timeline really attractive. And we can start making things and start planning things on a longer term horizon that institutions are actually comfortable with. I would think for the most part, you go into a group and you say, hey, we've got this great project. It's going to make your money back in 6 months. You're going to be a billionaire. That's going to raise more questions than anything. But if you actually come and you say, this is your traditional industry, this is your setup. We're talking about ways for you to capture these inefficiencies, monetize them, and actually increase your profitability overall. I think that's the attractive piece of the puzzle.
I think that this one's a little bit tough because we as miners, we're at the mercy of the price of crypto, and as we all know, it's incredibly volatile. I remember at the end of 2017 when Hydro-Quebec opened up their arms to miners saying, "We got lots of power, come on in, guys." They got, I think it was requests for 3 times more power than they actually had in the province.
Right.
And I think we left a very bad taste in their mouth because I'm certain that most of these miners have completely withdrawn their applications.
Right.
I doubt they actually allocated any new substations or anything like that, but this is kind of a chicken and egg problem. We want to be more committed as miners, but investors are the ones with the shaky feet that are willing to pull their investment once they see the price of crypto go down, as it does, as it also goes up.
Yeah, I think for us, the whole timing question, we literally took probably about 14 months to get our current facility online. And like a lot of people here and in the room, I'm sure we spent months looking for real estate that was already, had the capacity we needed. Nothing to do with crypto, but just kind of an interesting story. I've talked to a lot of people here today that have told me about brownfield projects they're doing in this area where it's old paper and pulp mills and things like that.
Right.
So we wound up doing brownfield just because we couldn't find any warehouses or other space like that had the power in place that wasn't going to cost us millions. So in the U.S., instead of paper, we wound up at a old factory that used to make nuclear warheads. So I thought that was kind of interesting, paper versus warheads.
Right.
And fighter airplane parts. So long story short, the timing for us took way more than we thought it would. But the power was there. We literally have about 20 megawatts on site that we can use. We're using 4 of it right now. So from the utility perspective, it was just excess inventory sitting there, not being used.
Yeah, can you? I don't want you to give away any secrets or anything, obviously, but can you take? Because that 14-month time frame is interesting. For the record, I'm typically told, it takes 2.5 years now for I don't know if I'd call it a hyperscale data center, but a large data center. And we keep getting asked, can you squeeze that down to 18 months is our goal, and I'm sure as soon as we hit 18, it'll be 12. And so we have to walk them through okay, well, here are the timelines set by the other people that are going to provide you the things you need for your data center. So your goal may be reasonable, may not be. But can you talk a little bit about your 14 months? Can you unpack that a little bit? How much was really a commercial real estate search, and how much was
Yeah, that's a great question. I would say probably about 3 months of that was looking for commercial real estate that was a little bit closer to home,
right.
Existing warehouse space. And after we had all those discussions with the utility where they wanted, $500,000 to run a line, across a 4-lane highway and just crazy things like that. We finally made the decision we need to go find a brownfield project that has existing capacity.
Right.
So we started on that. That took probably around 4 to 5 months to actually find a site that we could come to terms with the owners and sublease some land and do all that type of stuff. And then the rest of that really was just dealing with the local municipality as far as inspectors and things like that go. So the power part happened really quick once we found the site. We're doing everything in containers. Our business model was we were going to build one close to home where we could kind of build the process, and then we were going to start deploying these wherever the power was the least expensive. But in the U.S. at least, and I've had some conversations today that it sounds like it might be a little easier here, but in the U.S., everything is dictated by the Department of Insurance, which goes down to building codes and things like that. So it's kind of like if you're going to a fast food restaurant and you order something that's not on the menu and they look at you because there's not a button on the touch screen. It was the same thing here, right? We're trying to explain to this county building inspector, here's what we're doing. Nobody's going to ever be in here other than, plugging wires in and maintenance. But they just couldn't wrap their head around that. So we spent months escalating that to the State Department of Insurance, and we wound up making all these concessions where we had to build explosive fire doors in case somebody was in there when it caught on fire, and just craziness like that. So the bulk of it was really, in our case, finding the right real estate and then dealing with the local permitting office. The electric side was
the utility knew what they were doing.
They were already there. I mean, they were basically digging a trench for us and dropping some new transformers. So they did that work within, I think, 2 weeks once we got all the contracts in place.
And your challenges are similar to when, again, I'm an energy guy who's been doing renewables for 12 years. And that's pretty much when all of the North American power grid's gone from, 0.2% intermittent renewables to about 11 or 12%. It's been virtually all since 2008 and the advent of renewable portfolio standards. State level directives to say, if you're a utility in the state, you must generate this much electricity from green power, and it escalates upwards as a certain percentage of all grid power. But and there's two ways to handle that. You can either do it with small installations or build big wind farms. The small installations, what we call behind the meter. So in other words, I want to put solar panels on my roof. All of those same permitting things that I just heard Ed talk about is what the biggest complaint was, because it's not necessarily the biggest cost, but it is the biggest time suck. I mean, can you say a little bit about that? It just on average, what that cost you to get to the point to start mining, or or how much was permitting, or
so actually the permitting amount was ridiculously small. I mean, on the magnitude of $500 to $1,000. Now, all the stuff that came out of that, like getting stamped engineer letters saying, that the thermodynamics inside of this container are going to work with the fans we have and things like that, we probably, we spent probably $20,000 to $30,000 just to get all that paperwork from professional engineers signed and stamped, even though it was all, most of the engineers that we talked with were willing to do the work for us for free. Just here's the number of fans you need, or not free, but effectively free, a couple $1,000s. But then as soon as we came back and said, okay, the building inspector needs a stamped, sealed drawing, which basically now means that the engineer and the engineer's insurance is liable for everything, then the prices go up 10x. So actual permitting, less than $1,000. Engineering fees because of the inspectors, call it $30K.
Right. And Ben, you guys have done some development too, right? Can you talk a little about what that looks like from your guys' perspective?
We mostly done development in Southeast Asia. That's a completely different ballpark when it comes to permitting, regulatory, everything else. Generally speaking, that's not done so officially, but it's done very, very quickly. Now, you have to operate through your networks of connections, but that also means that we can take that timeline set up. Instead of being 14 months, we can do this in about 1 to 2. If we're talking about a smaller scale, kind of 2 to 20 megawatts, we can usually do that in about 2 months. So there's one time frame there for the setup in places like Southeast Asia or Central Asia, but then there's a trade-off there on the backside because you've got another operational time frame that you have to consider, and how long do you expect that deal to remain the same? Generally speaking, in these markets, the deal does not remain the same because once you have an opportunity cost to moving and packing up your equipment, all of a sudden you'll be hitting up with all these other surprise fees and all these other surprise costs. Right? To put it politely. Whereas in the Western markets, you're going to have this longer time frame in order to get set up, but operationally, you have more predictable costs, and you're not going to be hit with these surprise fees. So there is a bit of a trade-off there. We found that operating and trying to set up things in the U.S. is quite burdensome for the most part. It takes a while to go through and actually find the correct people to talk to, set up the correct meetings. They've got to do their own evaluative numbers. None of them know what the heck Bitcoin is. So that starts opening up a whole nother can of worms. Now they need to figure out what Bitcoin is. Maybe the utility provider has been screwed in the past by a Bitcoin miner who packed up in the middle of the night and left their bill outstanding. So you have a lot of these situations that need to be overcome. But generally speaking, I think the longer time frame can be managed in certain ways. A big portion of that is just the electricity. The actual building out of the equipment is not so bad. Most things that we do now are containerized. So this is something that you work on the electricity side of the equation on a number of different fronts, and then once the electricity actually gets approved, it's pretty quick for us to move in the actual mining facility in these containers. So that's something that can be managed in these different ways. And generally speaking, I think there's a lot of advantages in Western markets as opposed to the Central Asian markets where you can go to Kazakhstan and get 2-cent power, but what's your guarantee that once you've actually set up, your equipment's going to still belong to you? Considering your operational time frame there, how long do you plan to be there? Do you plan to be able to sell your equipment later, or is that just not yours? There are these other questions that come into play. And all of these need to be considered and put into your picture. The other thing, too, is labor. In some areas, it's really difficult to find this labor, and that's going to drastically affect your time frames for both building, construction, and also operational. In China, very easy. You can pay hundreds of people a few $100s US a month. They'll live at the facility 6-7 days a week. They work all the time. But in U.S. and Canada, this is not really something that you can do. You have to be a lot more restricted with your labor. You have to find higher quality people because you're not going to be able to, hire too many of them, and you're not going to be able to fire them. A lot of the times when you're looking for power in the U.S., the local energy utility is basically focused on how many jobs are you giving me per megawatt. Well, while I was in Washington during the craziness, they wanted 6 to 7 jobs per megawatt. It's untenable for me, right? So there are all these other considerations that you need to be, putting in there because you are benefited in many ways by coming to the West, but you're also restricted in many ways from coming here. But it's a more clear picture. This is what you get.
Right. There's no hidden. Yeah.
There's a lot less.
There's a lot fewer hands all of a sudden being stuck out as soon as they realize.
Correct.
Right. I mean, if you when we're listening to, if you guys were here for Dina's piece from BC Hydro, and a lot of the dynamics of what they're trying to do in terms of business development was saying like, hey, listen, we've got brownfields and brownfield development opportunities. The same thing exists in California, which is our backyard. Classic case is typically a lumber mill or something like that, and maybe even they had under the first round of a renewable portfolio standard in a state like California, they were able to get a contract with a big utility to turn wood waste into power, but they wind up being older equipment with a lot of deferred maintenance. They're primarily something else. They're primarily a food processing facility, or the electricity is their byproduct. And so an investment dollar doesn't necessarily go into the power plant because they know they can always just turn to the grid to do their thing and mothball this power plant. So the facilities tend to be not in the best shape, I guess, overall, or just out of date. And it's really challenging. So when, say they're pricing it at $80 and that's what their break even is $80. well, when it comes time for, and so most people understand the economics of the power business in North America, with one big exception being Quebec. The utilities don't build power plants anymore. They, for large part, don't own them anymore. They don't want the risk. They contract for energy. So the typical contract would work that, especially with all the renewables, we just talked about how this much renewables has been added to the grid. Well, those are a whole bunch of new power plants that didn't exist before. What happens is you go to a private equity fund, goes and gets in the queue at a system operator. Hey, I've got 1,000 acres in this part of California, and I want to build a solar farm, and I'm going to sell I've got a contract to sell all the energy at a certain price to Southern California Edison, one of the big investor-owned utilities. And so I have a 30-year deal. I take my 30-year deal, and that's how I get financed on those future revenues. The challenge is, and in California we have a very precise challenge right now with the largest utility in the state, PG&E, facing bankruptcy. Now they're facing bankruptcy because of a large liability occurred in the fire last year. But their bankruptcy filing, I think, that's my own opinion, is them trying to get out from underneath these PPAs. So if I take these PPAs and I bust them, and I'm 7 years into a 30-year deal, and I am the private equity fund who financed this $500 million power plant that is in danger now of becoming a white elephant, or PG&E or whatever succeeds PG&E comes back and says, yeah, I can still use it, but $100 is not going to work for us anymore. It's going to have to be $30, and that's because that's what I can get today. It's like, I can't make money on this thing at $30. So what happens? So there's a lot of that fear of risk. It's and which presents, frankly, a lot of us in this room with opportunities to find or maximize those assets. With crypto or use part of the consumption or whatever. There's also pitfalls to that. I could tell you stories of like that economic development story from a Rust Belt place where there's like, oh, you're saving jobs at the radiator factory because somebody else is using the data centers using the additional energy from the power plant. Well, then the radiator facility completely shuts down and moves to China or something. Then the guy who owns the data center will say, well, I need the power. Like, yeah, congratulations. Here's a power plant for $1. I don't know anything about power plants. Like, yeah, welcome to the power markets. So, and that's the opportunity can really cut both ways. But there's something that when you look at the BC example, like I could see those brownfield opportunities. I see them that's great, and I hope that happens for those communities. I just see there really being those not really coming to fruition. Is there something that a utility really needs to know from you guys and from everybody in this room about the dynamics of, like, it's not just I just need the cheapest power, but like what's the other thing, the other message they need to hear about that?
Yeah, I think one message is to really understand the risk that's involved with taking on a contract with one of these crypto mining companies. It's just a reality that if you have a certain kilowatt hour price and you're depending on a projection for the crypto markets to do X, Y, or Z, depending on what coins you're mining, and you fall below that threshold for a long enough time, you could be out of business, which means how are you going to pay your hydro contract if you're not making any money and you're out of money?
Right. And I forget who mentioned here about load. Like you had, maybe it was you that said, they've been burned by crypto miners in the past who said, like, yeah, I'm going to use 5, 10, whatever, megawatts, and then, well, sorry, guys, the number's going against me. I mean, let me ask you guys this, because we just talked about a 30-year contract kind of being formerly being the industry standard, maybe not be going forward. What kind of length of contract, if I'm sitting across from you guys as a utility, what kind of length of contract would you be comfortable with signing for power at a certain price? Is it measured in days or years? Maybe I should say
5 years.
Okay.
I'm comfortable with 5 years.
Okay.
That sounds pretty good to me as well. Otherwise, we'd probably be talking in minutes because
right.
it's difficult like that.
Right. Yes. Ed, what do you think?
3.
Really? Okay.
3 to 5, I think.
Yeah, 3 to 5.
But I think the other thing that would be important for the utilities to hear is, yeah, of course, one, we want the least expensive power possible, but 2, we'll probably also do all kinds of weird things that other customers would not do to achieve the best rates possible, right? Like if you tell me to turn off on certain calendar days in the month or throttle down during, at least in the Southeast when all the air conditioners kick on, those types of days, like we'd be absolutely willing to do that.
And do you price, Ben, you and I talked about this a little bit just before we came on. Do you guys price it so, another small thing about the power markets, you buy like energy because the goal of the power markets is reliability, not necessarily pricing, not the most efficient pricing of energy over a month or a year, whatever you want to think of it. I mean, they can vary from $500 one 5-minute period to -50 the next. They don't care about volatility that way. What they care about is overall reliability. So there's an energy price, and then you get paid for other stuff, ancillary services we call it, in broad across all the markets. And that means having like a spinning reserve. In other words, that power plant is turned on. The breaker is either open or closed, depending on what we need. But if there's suddenly a plant goes offline, I have electricity and nobody gets a blackout. Like that's what I'm trying to avoid as a grid operator. I get fired for blackouts that I could see coming. So for you, Ed, is that a factor in anything you guys do in terms of like those ancillary, like that flexibility that you just talked about, where I can turn down, like maybe my use as a miner is volatile depending on whatever dynamics are happening in terms of everything non-energy related, let's say. That kind of flexibility of power load, of power demand, is actually something that has real value to the power markets. And whether you actually are asked to turn down or up or not is irrelevant. Being able to offer it is a revenue opportunity for you. Have you guys had that discussion with your facilities, or with your as to the utility? Like, is it something you can offer up to them?
We're trying to have it now. It's been difficult. It's just not a mindset that I think they're used to dealing with. The fact that, hey, if you unplug us for 2 hours during the middle of a workday or whatever, it's fine. We don't care. I think it's hard for them to understand that at the level of power we're using.
Because there are demand response programs in with a lot of utilities. Again, demand response is something where rather than add more expensive electricity, like if it's a really hot day and there's a lot of air conditioning load in the summer in New York, like the temperature was 3 or 4 degrees higher than we thought it was going to be, prices can spike, demand can spike. So we ask everything else to turn. The cheapest megawatt is one that's avoided. So there's programs to do that. Most utilities run them. Frankly, most of them hate them because they're marketing programs, and there's an infinitesimal amount of load that can actually move that way. Sorry, you got a question?
Yeah, I do have a question. It's more has to do when you answered about the contracts. All of you basically said that you'd signed a contract for over 3 years. The halving for Bitcoin is actually like a year and a half away. With how close the prices are to breaking even, does that not make you nervous to sign a contract that would extend past the halving? I mean, if you look at Ethereum, they dropped like a third. Price didn't reflect that, but difficulty did. What are your thoughts on the halving affecting your operations?
Me personally, I'm not concerned about it at all. I think that the market price right now is in a really interesting place. I think there was a lot of people who, malinvested during the rise, and I think there's a lot of people who oversold. So, for me, I'm so profitable even at 3,500. I still have significant margins in there. We've structured our business in a way that it's so efficient that we've got all that downside risk. If the halving happens and the price hasn't responded positively by that time or shortly after that time, what's going to happen are the more expensive producers are going to leave before I do, ceding that market share. So I'm not so concerned about that, and I have a longer-term perspective when it comes to the price, and I think there'll be some catalysts in maybe 2020 or 2021 that drive that forward. So it's not a huge concern for me.
Is that something you're factoring in for next? Anybody in the next any development?
Yeah,
in the future?
right. I would actually absolutely agree with everything he said. Because the prices are so low, that actually, in my opinion, that should really encourage investment, because we could actually, as miners, we can take our time instead of having to settle for brownfield operations where there's a factory that's already in place, but it's not perfect for us. We could really slow down and go with greenfield projects where you build completely new structures, you maybe even put in a substation and just negotiate these rock bottom prices. That way, in the halvening that's coming in a year, even if Bitcoin does not fully recover, we can be in a great position where other miners have to turn off because they're paying 6, 7, 8 cents a kilowatt hour, and then here you are paying around 2. It's kind of just a question of, do you believe crypto will survive or thrive in the next 5 years? And that's kind of the root question you need to ask yourself if you're willing to be signing this 3 to 5 year power contract.
Do you think this is going to be a thing in 5 years or not? Like that's
exactly
what you're saying, right? Yeah. Sorry, did that answer your question? Go ahead. Oh, all right.
I like to look to the core developers to try and get those future perspectives. Vitalik recently said that the bleeding cycles in the market are a natural occurrence and very important to the health of it overall. I just wanted to hear your perspectives, being that from the sounds of you both may remain profitable. Would you prefer to see things stay profitable for everyone all the time, or do you see value in these bleeding cycles allowing you to accumulate equipment and see those difficulty ratings drop?
I mean, if the cycle stays consistent, I'd love it to keep doing this, because you can predict that and then buy hardware when it's dirt cheap, and then either flip in hardware or companies when the price is sky high. But I think eventually we will get to an equilibrium where miners are profitable but not super profitable.
Right.
It's just opinion, really.
I was going to say, all of this seems to be leaning towards being a commodity, some kind of commodity pricing model that doesn't seem to have a whole lot of. It looks like, trading margins or fees, or it ceases to be a traded product, or it ceases to be something that's less, in a financial services sense, less traded and just more commoditized. Is that fair?
Yeah.
Mm-hmm.
You might have guessed it from my frequent use of the word malinvestment that I'm a bit Austrian-leaning. And I believe these cycles are very healthy and very natural. And what we saw during the boom was that the incentives were so great that, it was good for these smaller companies to be able to go out there and raise capital. But the incentives were also really great for con men. And so what we saw throughout the entire boom was scam project after scam project after scam project after scam project. And what we've seen during the correction is that all these projects have been flushed out. And this is exactly how a free market is supposed to operate. Right? We're supposed to be bringing in this capital when the times are good and the economic incentives are there. And when the market corrects, then all these inefficient players, all these unprofitable or unproductive players are going to get washed out, which allows these inefficient players to basically be bought up and consumed by these efficient players who can consolidate, and they can grow and they create a solid foundation for the next leg upward. So absolutely, I think this is very important for any market, especially for this one, because it's proven that this industry doesn't need regulators to come in and fix the problem. The free market came in and fixed the problem. As soon as the prices went away, so did the scams. So did the con men.
Mark did bend down as being pro-blood. Sorry, Ed, and I wanted to. I just wanted to go back and finish that point about demand response. But are you, when you say that when you're talking to a utility, is it just that they don't have a program to fit it into? Like that's the thing I think about these things. They're actually more flexible than the utility can do anything with. Is that fair to say? Like they just don't get the conversation because it's. I've never had anything that behaves like you guys.
I think that's it. I mean, for example, we just had a smart meter installed on our house, and we got this big brochure of all these things that we can now do, like charge the car at night and save all this money. And like, this is exactly what I need for the mine. But then when you go over to the commercial side and try to have those conversations, it's just, them turning a factory off in the middle of the day, not throttling down, but turning off has been something their entire careers that people would have probably got fired over, right? So, so now where you're trying to have those conversations, saying no, it's okay. We really don't care if you turn us off for an hour or two, and we can drive the rate down. It's okay. it's just new conversations. It's a new world, I think.
Ben, have you guys ever looked at those programs too?
Yeah, I mean, actually, that's our primary focus. So, as I said, we're looking to capture that distance, so that gap between the amount of energy that's produced and the amount of energy that's consumed. And that's where you're going to find your most cost-effective energy, because that's the excess energy that can't be sold to anyone else, right? So I'm happy to go off 2% a year and achieve significantly lower operating costs throughout the rest of the year in order to get that. I'm not Google. I don't need to have 100% uptime, and if someone goes to me, I need to be able to provide that all the time. If I go off 2 days a year or however many hours a year, that's okay, right? I can work that into my numbers, I can work that into my math, and it makes it a much more profitable and sustainable operation that can survive much more negative prices downward. And that's our whole model now, is really allowing people or energy utilities and companies to capture that excess. Mm-hmm. But it is a difficult question. This is a very conservative industry. Energy is just a conservative industry. They're not the first ones to adopt new technologies. Right. So to come in and say, hey, look, we know how you've operated for the last 50 years or whatever, but things are completely different now, and there's this new use case on the periphery that you can use to increase your profitability and decrease waste. It's a really difficult conversation. It takes a lot of learning and a lot of education, mm-hmm. and it's something that is not being done very quickly, and needs to be done at a C-suite level, which is also not happening.
It's a very tough sector to do any kind of innovation in. It's just I'm neither pro nor anti that, except to say that it's a regulated monopoly. It's not exactly not the thing that spurs innovation. I've had countless people come to me and say, like, oh, I got this real-time analytics package. Utility people, can you help me sell? They're like, oh my God, I can't think of a more miserable life you've just set for yourself. They'll spend 3 years telling you about how innovative they are, then 2 years telling you about how it doesn't fit in this rate case, so come back in 5 years. There's just it's like being angry at sharks because they bite. There's no point in belaboring what their model is, except that you have to try and find a way for what you guys do to say, like, hey, how do I play within the weird set of rules perhaps you've given me to do that? We've got 6 minutes left. Is there any other? I know I was taking questions from these guys over here, but I'm kind of staring into the lights. Anybody else have any other questions or anything? You guys are free to ask more questions too if you want. There we go, right here.
I've got a question. For yourself, you mentioned Central Asia. So where is the big new frontier market in Central Asia for mining Bitcoin?
Yeah, there's a lot of talk within the stand countries. These are notoriously difficult markets to operate in. This is the same situation that you have in China. It's a very, very attractive picture when you're looking to set up and when you're doing the negotiation, but that's not the real picture, right? And there's a lot of stuff that's not going to be included in those costs. So I think there will be a lot of new developments in the stand countries, but I think most of those entities will probably be nationalized, and I think a lot of those groups will be screwed. So it's something that you have to take into consideration, the political concerns, right? And what's nice about Canada and the U.S. is you're not subject to those restraints. Actually, there's incredibly cheap power here, without the long-term political problem that would have. You can get sub 3-cent power in North America, for sure. There's 2-cent power in North America and Canada, for sure. You have a lot of excess energy that you can... Sorry? Well, you can come talk to me.
Or you can come talk to me.
It's here.
Yes.
It exists.
Yes,
so there's no reason why you want to go to Kazakhstan and set up for 2 cents and deal with that whole nonsense. Yeah. Do things in a market that you're comfortable with, that people that you can communicate with, and that are legally liable. Legally liable. Very, very important. Often overlooked for cheap energy prices. And then you can also generate your own power. One of the ways to get around a lot of the regulations, if you generate your own power. Buying from the grid, and when you're connected to the grid, you're subject to all the regulations that tie into that, which are extensive. generating your own power with your own resources is not subject to, most of those restrictions. You have your own gas, easy to run a generator. You have your own river, easy to run in-river turbines or windmills, that sort of thing. But especially with gas,
right.
Really easy to run generators and high reliability.
In-river turbines are a little. Well, there's usually a whole host of regulatory issues that have nothing to do with the fuel source or the availability of the technology. It's who uses the water is usually the biggest challenge for us in river hydro. But you're right. There are opportunities for that. The biggest, and I think we had this discussion too, the biggest challenge is the rest of the infrastructure that goes with it, that you wind up having to, that has worked very effectively for when you pay your power bill to make sure that there is, if that pole blows down, I'm still going to have, after 20 minutes, I'm still going to have power. People don't realize quite how amazing that is. And that's because there is a grid that connects, an actual grid that connects all of this together, and I can find a new route. When you trade physical electricity, that's actually the biggest piece that's the most important. It's not about, we verified there's a power plant here and it's generating this much. We can see real-time performance data. And yes, we've given you an economic signal that the price in this node has gone up 50% in the last 10 minutes. We need electricity. Great, your power plant is 1,000 miles away. Your biggest proof pieces, tell me your pathway. Give me the bus ticket that says the transmission, that you've got the availability of transmission, and there is a transmission market where you go and you buy that. It's kind of a Byzantine and odd way to do things, and then you have to do it every 5 minutes. But that sort of duct tape way is how we optimize the power grid as we have it today. That opens opportunities to be able to say, okay, can I go directly to like I said, with that ownership model where it's a fragmented ownership model for power plants, and their primary thing is to have one big contract with the utility that will buy everything at a set price for a long time. Well, that world's kind of coming apart. They want other partners to buy the power, and you sit on their side of the substation and you become parasitic load effectively. So you can do that there if you can find somebody who's willing to do it. Now, there are regulatory concerns, NERC, and there's a whole lot of people who regulate the physical space of power plants that you have to comply. But generally speaking, I think that's less. I think that there's a great deal of upside, and not just because of what I do, but I think that there's a great deal of upside in that underutilized infrastructure. Yeah. Hi. Yeah. Go ahead. Yeah, go for it.
Yeah, I just raised some really interesting points about the natural kind of consolidation to fewer and fewer bigger players over time as we go through these contractions in the market, coupled with the other point that you mentioned about some of these countries that can nationalize people's assets freely and the risks there. What are your thoughts about how all that correlates towards the risk of a 51% attack on Bitcoin? Do you think it's possible? Do you think it's a concern given those factors?
I don't know, guys.
I'm happy to jump on this again. We had with the Bitcoin Cash fork, we had the Bitcoin hash war between SV and Bitcoin Cash ABC. We saw it's really not so easy to do a 51% attack, right? And these are much, much smaller coins. But the truth is that you have to have not only enough hashing power and enough electricity to protect your own coin, but to, or at least in that case, protect your own coin, but also to attack another coin. There's logistical restraints in all of this. If you're talking about Bitcoin, the network is so tremendously large. We're talking about accessing country-level amounts of power for short-term, for a short-term period, and also amount of hardware that's kind of not available. So it would be incredibly difficult to 51% attack Bitcoin, just because there is not enough hardware freely floating around on the market. And if you try to buy it up, that your costs of doing so are going to go up tremendously. Not to mention you wouldn't have the power to actually run it. Even from a nation-state perspective, This is not something that's very feasible. The only country in the world that has the internet infrastructure to really affect Bitcoin mining is China. And that's because they do deep packet inspection with the Great Firewall. So what they could do is they could essentially make every ISP drop every mining packet that's being coming out of China and not being forwarded on to the mining pools and not being forwarded on to the network. That would open up possibilities, because that would take about 70% of the mining hardware offline and open up something in another country. Though that's about really the only implication or the only opportunity I see for that to open up. But I think that's highly unlikely given how China operates with Bitcoin and how much wealth they generate with it.
Right, yeah, I would agree generally with that. I mean, the thing is why? That's the real question. Like, not only is it having a consortium try, and if it was feasible for a consortium to band together and do something like that, but if it was a state actor like China, what's the incentive behind it? It's probably way too costly to be worthwhile. What is more likely and does happen is when you have 51% attacks and other types of attacks on smaller networks, like we had with Ethereum Classic more recently. And that's kind of more the risks that we're seeing today, I think.
Great. Well, guys, we're a couple minutes over. If there's any more questions, I think most of us are going to be around. Do you have something quick? Would that require some kind of Uber regulator or something? I don't know.
Yeah,
anyway,
I think
yeah.
Right. I would say no to that, actually, because with mining, I think right now the inflation of Bitcoin is something around 2%. Maybe correct me if I'm wrong, but somewhere around that number. It's pretty minimal. So after the halving, it's going to be around 1%. So the supply side of crypto, that in terms of mining, is very minimal. So I don't think that miners or the cost of mining one Bitcoin will affect the price much at all, especially in the future.
Yeah,
Great.
I'd agree.
All right. Well, great, guys. Thanks for the panel. Great discussion, guys. Thank you for the questions. And great. Enjoy the rest of the event, too. Thanks, guys.